Well, welcome to Under the Radar Report. We're continuing our series on fund managers, and we're very lucky this week because we've got probably the best small cap ethical fund manager in the world. Maybe there's lots of them, but certainly Andy Gracey from Australian Ethical is the best known. And if you look at his performance over 3 and 5 years, it's actually doubled the market. So it's an outstanding performance, which goes to prove the value of ethical stocks. So welcome to Under the Radar, Andy.
Hi, Richard.
My first question is, considering the really good performance of Australian Ethical's Emerging Companies Fund, should that be considered a standalone investment strategy, or should it be considered part of someone's overall equity strategy?
Look, I think it can be thought of as a small cap investment strategy. We've got an ethical screen which we apply, and after that screen, we're looking for quality small caps that are growing.
Well, quality, there you go. I mean, that's probably the secret sauce that lies in behind the performance. But when we look at, I guess, ESG, environmental, social governance, you've been a player for a long time. How does that inform your stock picking, Andy?
Look, in terms of every single stock within our portfolio is actually ethically appraised and has to get through the screen and get that tick of approval. It's got an independent team that goes through and looks at the company and questions the company. And what it means in practice is that the fund is overweight certain sectors. It's overweight information technology, it's overweight healthcare, and renewables. Renewables are very important to us.
And I guess when you've translated that into stocks in recent times, when the market has been a bit difficult, what sort of stocks have you been buying in the past few months?
Look, in terms of the past few months, it's been a difficult period for small cap, micro cap investors, particularly. We generally have been looking within the portfolio in terms of stocks that we hold, and we've been adding to positions like ImpediMed, which has got a lymphedema technology whereby it measures body fluid and can detect the emergence of lymphedema preclinically. And we're really happy that the company actually got a US survivorship guideline in the last 2 months. So, that company's rallied, well over 100%.
Well, we're lucky that we like ImpediMed. What sort of, how many stocks do you actually own in the portfolio? Or do you hold?
This is a really well diversified portfolio. We're holding 60 stocks. So a big position for us is a 2% holding or 2 or 3% holding, within the portfolio. We've got some earlier stage companies, which, companies like ImpediMed, which are, early in their kind of commercial development. But when these type of companies get on the guidelines and get, positive clinical data, you can get really some, value for your investments.
Can you take us through, say, the top 5 or the top 6 holdings, Andy, to give us a flavour of the stocks that have measured up to that, to that ESG criteria, ethical criteria?
Look, in terms of some of the top holdings within the portfolio, look, we've got 3 of the gen retailers out of New Zealand. This is Contact Energy, Meridian Energy, and Mercury Energy. And these companies have between 85 and 100% renewable energy generation, largely from hydro and geothermal, but increasingly from wind. These are kind of good kind of ballast for the portfolio. This gives the portfolio a little bit of yield, but it gives us exposure to renewables and exposure to electrification. Pretty kind of boring type stocks, but if you add in a long-term growth driven by electrification, we think investors are getting pretty well rewarded with the yield and growth. There are reasonable names within the portfolios. We've also got information technology that's quite big in the portfolio. Companies like Big Tin Can, we're a substantial shareholder. SaaS technology company, circa 140 million revs, growing, which is moderating, but it's still kind of growing 10% plus. And is also cash flow neutral this quarter. So So trading at something over just around 2 times, with the potential kind of takeover interest in the background, priced at maybe 80 cents, maybe more, looks pretty good buying in my book. Another company that we've got, and it kind of links into that renewable story, is a company called Gentrack. Now, Gentrack provides energy billing software to the electricity sector in UK, Australia, New Zealand. It's also got airport software. But they are really kind of getting involved in this distributed billing, and Gentrack is doing something really interesting with Energy Australia at the moment, whereby Energy Australia is putting solar panels on people's roofs and taking that electricity when the network needs that generation. So the amount of billing technology, information technology required behind that is big, and Gentrack's embracing that type of future.
Yeah, they've definitely got a very charismatic CEO who's driven change there, that's for sure. How important is talking to management for you? I mean, how close do you get to management with all, because you've got so many companies there, 60 stocks, like how do you get across them all?
Look, for us, a good stock is a stock that we hold for 5 or 10 years. We've got an open door policy. They are at the source of information. They are the experts in the field. It's not me looking at a spreadsheet. It's a CEO, a CFO who's out there in that specific market and really knows their business, and we want to talk to them as much as we can. Just keep on talking. Like,
I noticed you've got holding in the consumers discretionary sort of end of the market. What sort of stocks do you own there, like the retail or the more retail sort of end of the spectrum, Andy?
Look, we're significantly underweight retail.
Right.
Look, in terms of consumer discretionary, look, we've got we're very underweight, and that's a decent sector within the small cap investors universe.
Yeah.
It's good being underweight at the moment, given the machinations around the economy and retailers starting to feel a little bit of heat there. But we've got some companies like G8, childcare operator, should have relatively kind of defensive earnings and on a reasonable type multiple. We've got 3PL Learning, which is a consumer discretionary stock, which is the owner of Mathletics and other type online applications.
Getting back to renewables, like from my experience in renewables, every time I've found a good renewable stock, it's been taken over. Like, I mean, really, there is a lot of appetite in the private equity sector, especially for getting a hold of these assets, in infrastructure assets in general. How do you generate your funds exposure to renewables?
Renewables in Australia are a pretty tricky place to invest in, as there's not many strong kind of renewable energy companies. That's why we like those gen retailers out of New Zealand.
Yeah.
Because they're big companies, they're highly profitable, they're dividend paying, they're 85 to 100% renewables. But you're right in terms of we were substantial shareholders in Infigen, which was taken over. We've looked at Genex here. We kind of struggle a little bit, risks around their pump hydro and that business model in pump hydro, and that it's essentially a financing arrangement between Genex and.
Do you own Genex?
No, we've never held Genex, but we continue to look at it. It's in the space that we like. It's just getting our head around the engineering risks around the pump hydro and also the structure of that agreement there.
But yeah, I guess the point is a lot of these are nascent sort of areas, aren't they, that have yet to build up an economic case. Overall, is your criteria for being in your fund companies that do have earnings now?
Look, we will invest in pre-revenue companies.
Yeah.
And we do invest in some of the drug developers. And Emutep is a drug developer. It's got a lag-free technology. It's very innovative. We've been holders of that for a number of years. We've made good money on it. We're sitting on reasonable profits at the moment. Yeah, so, but for those type of companies, we were able to really kind of spend time assessing the technology. We've had some efficacy readings. We understand the technology, where it fits into the treatment regime, and we're more kind of playing that clinical development process, because as companies progress towards getting drugs approved, then the value that the market will attribute to that company progressively increases.
Yeah, so in your TEPA, there are a couple of other med tech or biotechs that you could...
Yeah, look, we've talked about ImpediMed. We've also got Cyclopharm, that's in the portfolio. That's a revenue generator. It's a dividend paying. I think you've covered Cyclopharm over the years. We're investors in SomnoMed, interesting company, oral dentistry fitted competitor to a Resmed or a Fisher Paykel Healthcare.
It's been a hard road, hasn't it, for SomnoMed?
It has, and interesting enough, the market at the moment is really kind of penalised the company, because the market is penalising companies where they think the cash burn is too high. Well, these guys are just finalising their latest version of their oral fitted device, which will have a chip in and actually provide medical data to the sleep physician and to the doctor. So this new innovation that's coming through in SomnoMed may actually seriously bring them into the status of being a medical device.
Well, it's been a hard road, but they're still around, so there's still hope.
They're still around, and 80+ million revenues, and just about to kind of lodge their new device with the FDA, with an approval later this year. So, like, it's all there.
And what about, like, in the past, you've mentioned that you've invested in lithium, which was interesting to me, considering the ethical bias and is generally away from mining. Are you still invested in lithium?
Look, in our larger cap funds, we are. We're looking. We like lithium. We view it as part of the future in terms of energy storage kind of technology and ingredients. We've made really good money on Pilbara, but it is hard to find pure plays and other kind of critical minerals or copper or nickel within the market. So we're not investing in mining per se is not really our expertise, although we are developing knowledge around battery ingredients.
Lastly, you've been around for a while now. Are there any lessons from investing that you've got to impart to the...
I think having quality business models, and we're big on recurring revenue models within our investments, and we're also big on companies that are not just the east coast of an Australian type business. We like good, profitable east coast of Australia companies, but ideally we want a company that's taking some IP on a global trip, in terms of taking it to the US or taking to Europe, and finding the next Cochlear, the next Resmed, the next Fisher Paykel Healthcare. That's what, for me, small cap investing is all about. It's not holding something for yield, within the portfolio. We are looking for growth. So I think the lessons have been, quality business models, and the market is really asking for free cash flow generation in 2023, whereas in 2021, it was a bit more ready to kind of pay up for a little bit of growth and acknowledge some cash burn, whereas that's kind of flipped at the moment. So I think if you can get a company that's just kind of coming into that a little bit of profitability, and the market still hasn't kind of recognized that, I think you're onto a good thing.
Well, certainly, having seen Gentrack's performance in the past 6 months, that's a perfect example of what you're talking about. So, here's to picking more Gentracks. Thanks a lot for joining us, Andy.
Yeah, exactly. Thank you. Thanks, Richard.
Thanks, Andy. Bye.